Okay, welcome here to week 2 as we begin the first part of chapter 3. We're going to break chapter 3 down into 2 weeks. The second week focusing a lot more on payroll registers and doing Form 941. This week we're going to introduce Social Security and Medicare taxes, which are also known as FICA taxes. I wanted to give you a brief overview of where we're going now this second week up through the week 6. This is an 8-week semester. So the majority will be over the payroll taxes that are coming up. This week we're going to be looking at the Social Security and Medicare. And you're going to see that we have two different people, two different groups who pay different payroll taxes. Not just the employee pays them. As you'll find, as you will see as we go, the employer also pays payroll taxes, and they just happen to pay these first two that we're going to talk about this week, Social Security and Medicare. As we go through, I'll expect you to read through all of the notes, but I'm just going to hit the high points and then mainly focus on the problems to make sure you know how and understand how to solve the problems and get the answers. So the first of the two FICA taxes, so the first thing you really need to get out of this lesson is FICA taxes are broken into two parts. The first part is the Social Security. If you're reading in the book, a lot of times they refer to it with this acronym, the Old Age Survivor Disability Insurance. So that's the first part of the FICA, the Social Security. The key things that I want you to have memorized from this class with Social Security is what it's taxed, what the rate is. Now, sometimes in the book will update occasionally, but as of this fall, 2017, the book, I believe, has 6%. More accurately is actually 6.2%. That's what, if you ever do the calculations on your own pay stub, it is at 6.2%. That is the Social Security rate. It doesn't really change. It hasn't changed in years. However, this number does change. This is the cap for Social Security, another number you'll want to have known. Now note, this is for the year 2017. Those watching this video in a future semester, look to your notes. Your notes will have the updated number. I don't update these videos every single semester when new numbers come out. So 2018 will have a new amount that you'll want to use for your examples, but we'll be using 127,200 for the examples this week in this video. The key is once an employee hits this amount with their taxable Social Security wages, they will no longer pay Social Security tax for that year. And again, what I said was Social Security taxable wages. Doesn't mean that's how much you paid into Social Security. This is just your wages, but what is considered taxable for Social Security purpose. We're going to find that a few items aren't taxed on for Social Security. What I mean by that is if you earn $100,000 gross paycheck, but you have $1,000 come out every month out of your paychecks for the year, so you had $100,000 for a year, and then you had $1,000 every month, so that's $12,000 went to your medical premiums. Instead of being taxed on $100,000 for Social Security, you would only be taxed on $100 minus the $12,000. So you'd only be taxed on $88,000 for Social Security purposes. So that's what I mean by taxable Social Security wages. Okay, the cap, that number does change. It's always connected to the Consumer Price Index, just something that I thought was interesting. Please read through these as I go through. Again, I'm only going to hit the highlights. The Social Security, notice how low the cap was back in 1970. The cap was, as you can see, way lower, so were they maybe not taking out enough, people were hitting the cap and therefore not taking out enough Social Security. Possibility. As we go through now, the Medicare, that's the second part of the FICA taxes. Medicare is the second one you need to have memorized and remember for this class. You'll also need to have memorized the percentage for Medicare. Again, it doesn't change 1.45% stays the same year after year. The other difference between Medicare and Social Security is there's no cap. So no matter if you make 50,000, 10,000, or 300,000, you're still going to pay 1.45% into the Medicare fund. This ultimately goes towards when you become 65 and you start collecting Medicare. This is a piece of it that you get. If you want extra, Medicare has different parts that you can get extra. This is just the bare bones part that you would collect at age 65, called the hospital insurance. So the part that you pay in for Medicare only covers hospital stays. It doesn't cover doctor's visits or medications. Those are different parts, like Part A, Part B, and all the way up. I believe they have up to Part D. I don't have Medicare memorized by any means, but I know they're up to at least Part D. Now, beginning with the Obamacare, or the Affordable Care Act, in 2013, people are taxed an additional rate, and that is an additional rate on top of the 1.45. They're taxed an additional 0.9 if they happen to go over 200,000 if they are single, or 250,000 married filing joint. Now, what I mean by that is so if you are single, the first $199,000 that you make, and $999, you're going to be taxed at 1.45%. Once you hit 200,000 and go over, the next dollar that you earn will be taxed at the higher rate. So therefore, not all of your money is taxed at the higher rate. It's only that amount that is over. So as an example, go ahead and hit pause at this time to fill out this example to determine what is the Medicare that will be deducted from an individual who earns $400,000. Okay, as hopefully you did hit pause, we'll bring up the answers, and you'll want to hit pause as we go through. Just be ready to do that. I don't like to take up the video time and waiting for you to do that. As your answers, the first 250,000 is taxed at that lower rate because this is a married filing joint couple. They are at 250,000. Anything above that is taxed at the higher rate. So the next 150 that they earn to get up to the 400,000 is taxed at that higher rate. So therefore, the total Medicare tax that this couple would pay is the $7,150. Okay, with the FICA taxes, so the Medicare and Social Security. First thing that really another important item for this week is to know that both the employee and the employer pay this tax. Whatever is calculated for the employee to pay, the employer has to chip in an additional equal sum. So quite a bit of money ends up going into your Social Security and Medicare fund. Not necessarily just yours, but the fund. And so what that does, when the employer takes money out of your check as the employee, it creates a liability for the company that they have to pay your money to the government, but then they have to also put into that liability account their own piece, the additional matching support, which would then in effect double what goes to Social Security. So for example, if you had $10 coming out of your check for Social Security, the employer will have to match that and put another 10 into the account. And when it's time to pay the FICA taxes, they would have to pay the full 20, which includes not only just your 10, but an additional 10 out of their own pocket. So what I wanted us to do with these next couple lecture examples here is I want you to determine on this one how much Social Security and Medicare taxes would be withheld from the employee's pay, assuming she has made $20,000. Now this is just the employee's pay this time. We'll get further down when we look at the employer and then them together. So go ahead and pause. Figure up how much this person should have had deducted for Social Security and Medicare. Okay, our answers for this one, for lecture example number 1, when you take the amount that she has earned over that week, so she's worked 40 hours at $15 an hour, we're going to assume all of the money that she made is taxable for Social Security, meaning she didn't have anything like medical premiums. So we're going to use the $600 that she earned, multiply it simply by that Social Security tax percentage. This is how much would be coming out of her check for Social Security. And of the 600, 1.45% is $8.70. Comes out from Medicare. Now go ahead and pause again and look at number 2. Number 2 down here is we have a CPA earning $5,000 a week. However, note, and this number will be different if you're in a future semester further along and your Social Security has changed, your number will not be 125, your number will be higher. So make sure you look at your notes. But you could solve it both ways if you wanted to. You could solve it as of if you were back here in 2017, or you can solve it how you would you're currently, and just email me and I will gladly send you the updated answers if they are not already available in the IBY Learn. Okay, so let's look at the answers for lecture number 2. Go ahead and pause if you haven't real quickly and solve that one, and then see if you can match what we did. So for this, with this answer here, if I add in $5,000 plus the $125 that she's already earned, that takes us to $130,000, which is over the Social Security limit. That's all I want to do here for my, basically for step 1. Is she over the limit, yes or no? Once I determine that yes, she is over the limit, I no longer use this $130,000. Pretend that it's not there. That's why I put here, now forget it. So many people want to try to use this in future calculations. You don't want to do that. So once we have determined yes or no, we have determined that the answer is yes. What I want to do is take what is the actual cap for the year that we're doing. So in this year, in 2017, it is $127,200. Take the cap and then subtract out where we started before this pay. That'll tell me how much I have left to tax for Social Security. So for this example, I only have $2,200 left to tax for Social Security out of the $5,000 total dollars. When you do the $2,200, you are left with only paying $136.40 into Social Security. But note, with Medicare, there was no cap. So the entire $5,000 is taxed at the 1.45% rate. As we look down now to lecture example number 3, what I want you to be able to do is now take both of these two employees in number 1 and number 2 and tell me how much would the company in total have to pay the IRS in FICA taxes, knowing that the employer has to pay their share as well. So go ahead and pause and I will go through the answers. So with number 3, if you took $136.40 and $72.50 and doubled it, and you also took $37.20 and $8.70 from number 1 and doubled it, that's going to be your answer then for number 3. You should have got a total answer of $509.60 going to the IRS for FICA taxes. Now, our last thing that we need to learn how to do before we get in further and keep making this longer and longer is what I want us to show now is exactly what is a payroll register. In a sense, a payroll register shows your first parts are how much did you make and how much of what you made is actually taxable for Social Security. And we'll have future ones that go out further. We'll say what's taxable for Medicare, what's taxable for federal withholding. We'll have 3 different taxable items. And then what are the actual taxes that are withheld? We'll have Social Security and Medicare here. We'll have additional ones in future weeks. So you're going to take your wage minus what was withheld in taxes, and that'll determine what our net pay is. So that's what I want us to do here. We're going to look at I give you the wages for 2 employees. Now, these 2 employees are very, very close to the Social Security cap. Both are going to earn $7,000, and we're going to assume that all of that is taxable. Therefore, they didn't have anything that's considered a tax deduction, like as I had said before, medical premiums is a prime example. So as we go through number 4, I'll kind of work through this one to make sure you have it down, because this will be one of the first payroll registers we really looked at and filled in. So let's look at number 4 here. What we're going to start out with is simply entering in our gross wage. So our gross wage, I'll bring it over here. Our gross wage, $7,740, that's going to be our wage expense. When we start looking at doing the journal entries in just a few minutes, this will be our wage expense. How much in total did our employees make? Now, just because they made that much doesn't mean they're taxed on that much. So now I come over to what is actually taxable. And if we look at B, Bob here, it's 0. Notice Social Security taxable is 0, and that's because when you look over here at our example, he's already over the cap of $127,200. So therefore, he doesn't even have anything left for Social Security. Whereas Amy, she's close. If we do step 1 and we just determine yes or no, is she going to be over the cap with this pay? The answer is yes. When we add 124 plus 7, that gives us 131,000. She's over the cap. So therefore, we forget the 131 and start working backwards. If our cap is 127.2, we take 127.2, subtract where she was before this pay. That leaves $3,200 left that's actually taxable. This amount is what we're going to use to determine our next item over, which is the Social Security amount. So for Amy, we're going to take $3,200 and multiply that by the 6.2%. Whereas Bob, we don't have to do anything. He's already over the cap, so it's just 0 for Social Security. Now remember, for Medicare, the amount is only 1.45%, but there is no cap. So we can tax them at the full taxable wage base. And in this one, we didn't have any weird things deducted. So we can tax 1.45% at the 2 gross wage numbers given. Once we have our 2 deductions, we can simply take our wage minus the tax for Social Security minus the Medicare tax and determine then how much did this employee actually earn and get a check. Now, this doesn't have everything. There's no federal withholdings, but we will get to that in the upcoming weeks. Bob here has gets most of his money that he earned because only $107 went to Medicare. Nothing went to Social Security. Now, the next part, and this part isn't really discussed in the book until the very end, but I think it's crucial that we go ahead and look at it now and continually work with journal entries throughout the semester. If you've taken Accounting 101, this part should not be difficult. If you haven't, this part will be a little bit of a struggle until you get used to the journal entries. So the main thing with journal entries is we've got to follow the accounting equation. So this is kind of a quick recap of the Accounting 101 equation, along with where the normal balances are with the minus plus or the plus minus. And I want us to be able to journalize at this point the employees check. How did we go from their gross wage down to their net pay? And that's going to be an easy one. The journal part for the employee is simply using a lot of the totals that we'll get from all the employees together. And then part 2 is remembering which taxes does the employer have to also pay. So when we look at the journal entry, we're going to start with, remember when I said gross wages of $14,400. It comes right here from my total from my payroll register. This column here I don't use. This column was only used to get my Social Security tax amount. After that, I could get rid of this column if I needed to. I don't want to, but I could have if I needed to. So out of the 14,400, I know that 198 total is being taken out for Social Security out of both of my employees. And I can do both employees at once. I don't need to do a journal entry for each individual employee. That would, if you had 50 employees, that would be 50 different journal entries, when you could do it as one big journal entry and just combine everything. So Medicare withholdings that I took out of all of my employees was 208. That left me with cash that I needed to pay, or perhaps a wages payable of $13,992.80. These numbers should match your payroll register from your journal. Now the payroll tax expense, this is the employer's part. This is what they have to pay out of their own pocket. So notice this is an expense. The employer has to pay an additional $407.20. And that simply comes from this, and that they have to pay this amount again. They have to put another $198.40 into the withholding account, knowing that they're going to have to owe that to the government soon. And they're going to put an additional $208 in for Medicare. When you add both of these up, that's how I determined what the payroll tax expense is. Payroll tax expense is simply all of your credits that you had to pay tax on, added together. All right, here's some key things that you'll want to know about an independent contractor. Notice if you hire an independent contractor, you do not have to take out Social Security, you don't have to take out Medicare, and you also don't have to pay those taxes in addition. So a lot of companies, if they ever have the choice, or maybe there's a little bit of a gray area, they're going to try to hire you as an independent contractor. Whereas a lot of times as you, the employee, you may not want that. Because if they hire you as an independent contractor, that means you have to pay your own taxes, take them out on the side, and also pay their part too. So it seems like it's hardly not fair when you're an independent contractor. You have to pay your part and the employer, since you're considered both the employee and the employer. Some of the rules of determining if you're an independent contractor or not, the key ones here: how are you paid? If you're paid by the hour, you're pretty much going to be labeled as an employee, and you better be paid as such. If you're paid by the job, however, you have to go and get a certain job done, doesn't matter how long it takes you, that's a pretty good indication that you are an independent contractor. A couple other ones here: you're an independent contractor if you have the opportunity for a profit or loss. If you get the job done quickly, you're going to do better. You're going to get more money because you're spending less time. If you have to provide your own equipment, good chance you're an independent contractor. Here are some of the other items as well that I thought were somewhat significant in determining if you're an independent contractor or not. You may not hit every one of those, but as long as you hit a majority, you would be considered an independent contractor. If you are an employer, if you have an employee, this is if you ever start your own business, something you must know. If you start your own business and you hire people as an employee, you have to go out and get what's called an employee ID number. This is very similar to a Social Security number for an individual's. It's just your federal tax number then as an employer. So they can, the IRS and Social Security office can go back and see how much you paid, and is that what the employee is also claiming. A few people don't pay FICA taxes. You can read through those, and you need to see who doesn't pay it. Here's the part that I was talking about, decide to know which wages are actually going to be taxed, and then can I deduct anything from my wages and not pay tax on that portion for FICA taxes. Now, everything here is considered taxable. So this is the one that's going to be different between this week and a couple weeks in the future when we talk about federal withholdings. You'll just want to know, get this memorized somehow. FICA taxes, you do not get to deduct 401k payments. If you put money aside into a retirement plan, you still have to pay Social Security and Medicare tax on that. That's the part you'll want to have memorized. As we'll see when we get to week 4, that's not the case for federal and state taxes. Read through the rest of these. These are mainly just regular compensation type items that you are taxed for FICA. However, these are the ones that you'll want to have memorized. These items that are not taxable for FICA, and the ones in yellow down here are your primary ones that happen quite a bit, especially for those who have a full-time position somewhere, a salary type job, or maybe at least full-time hourly could be as well. If you have medical premiums deducted from your pay, those medical premiums will not be taxed for Social Security. Same with if you put money away into a flexible spending account or HSA account. These are to help pay for medical stuff. And dependent care. If you put money aside for dependent care expenses, that money is therefore not taxed for FICA, which is a big help. So if you have $1,000 that you made this year for this month, or whatever it is, maybe this week, $1,000, and you had $100 going to dependent daycare, that $100 you'll get back dollar for dollar when you pay your babysitter. Instead, if you didn't have $100 put away for dependent care and you just had it in your regular check and not put aside, you would have to pay tax on that $100. And depending on your tax rate, but especially with Social Security, at least $7.65 is going to be going to FICA taxes. And why would you want to have $7.65 gone when you could have the whole $100 to pay for the babysitter? Okay, one of our final pieces here that I wanted to discuss is doing a payroll register now with these updates, with knowing how much am I going to be taxing for Social Security and Medicare compared to my gross wage. So with my 2 employees here, Connie, $47,000 a very average salary, but nowhere near any caps. However, Dylan has a very high salary, and he's pretty close to the Social Security cap. So when we look at their gross pay, Connie has earned $2,500 gross, Dylan $6,900. We're going to need to take that and then determine how much is taxable for Medicare. That's the best place to start with Medicare. And then decide, okay, out of the, say, $6,900, let's say the answer was $6,700 was taxable. And I haven't even looked at it. That's not the answer, probably not. I just made that up. $6,700. If I was to add $6,700 to this amount, I would go over the cap. So therefore, my Social Security needs to be less than that $6,700. So what I want you to do is it's going to take you probably 5-10 minutes, and go through and fill out this payroll register. And then after you click pause, when you start back up, we're going to go through the answers. All right, hopefully you've hit pause by now, and we're going to go through the answers at this point. The first thing that will come, let's look at Connie. Out of the 47,000, or out of the 2,500, that's her gross. That's her gross wage, and we're going to put that in that first line for Connie. Now we have this 170 that Connie does have taken out for 401k. That's good to know, and we're going to need to know that. But for FICA purposes, she can't deduct her taxable wages for that amount. Medical premiums we can deduct. So what you should have as a calculator off to the side somewhere, or making notes of this, we're going to start with 2,500, and we can deduct 220 from that. She's not going to pay tax for medical premiums. And then 200 into a medical flexible spending account, so we can deduct another 200 from the 2,500. And then 180 went to pay for child support. That's not allowed. Child support is completely different than paying for child dependent care. Child support you get no deduction for. So if you take 2,500, subtract 220, subtract 200, you're going to get the Medicare wage of $2,080. That's all the more she's taxed on. not the full $2,500. For Social Security, if we add in $2,080 plus the beginning amount, $47,000, she's still nowhere near the cap. Therefore, the entire Social Security, the entire Medicare wages is also taxable for Social Security. Medicare and Social Security will always be the same until the caps hit. So now if you go through and times by 6.2%, times this one by 1.45%, and again, you're going to use these green numbers. The other deductions, what I did is instead of writing each one of them out, we will do that in the future. But for right now, I'm just adding up all the monies that she had taken out of her check that went elsewhere, not into her pocket. She's going to have a final net pay of $1,570. Now notice I only use the green to calculate this tax. Once I've done that, then I come back to the $2,500. $2,500 minus the Social Security, minus the Medicare, and the other deductions give me my net pay. That's what her check will actually be worth. Now when we get down to Dylan's $6,900 gross pay. We can't do anything taxable purposes for the 401k, but we can deduct $500 for medical premiums, and we can deduct $500 for daycare flexible spending. Showing here that the employer matches also up here, that's irrelevant for right now. That will only come into play when we do the journal entries. So if we took $6,900, subtracted out $500, and then another $500, we're left with Medicare taxable wages of, instead of $6,900, subtract $1,000, so $5,900. Now if you take that $5,900 and add to that $123,400, the prior wages, we will go over the cap. Now that we've gone over, we forget whatever that number is, and then we start working backwards. We say the cap is $127,200, and then subtract where they were at so far. So $127,200 right here, minus where we were at, $123,400. That tells me that only $3,800 is actually taxable for Social Security. $3,800 times the 6.2% times 1 and then $5,900 times 1.45%. And then you go up here for the other deductions, subtracting out the 401k, medical premiums. We're going to get $1,750. All we need to do at this point is take the $6,900 and subtract out the Social Security, Medicare, and other deductions to get the net pay. We can now do the journal entry as well. The journal entry are just the total, so we're going to have a wage expense of $9,400, and then subtract and then have credits for the three withholdings here. We had Social Security was $364, $115 for Medicare, and then I went ahead and separated these because that's how we're going to do it in the future, just to show you. I went through and specified 401k had a total of $920 going into it. The next piece I show here is the payroll tax expense. Remember, the employer will pay the exact same amount as the employee did for the Social Security and Medicare. So that's an additional expense for the employee. And then I also told us in the problem, and this is where this comes into play, is the employer said they were going to match the premiums and the 401k. So they're having to pay an additional expense. So every one of these expenses is something additional the employer has to pay out of their pocket. The last piece of this lecture talks about the self-employment and independent contractors. Key things that I want you to take away from this is independent contractors still have to pay payroll taxes. They still have to pay FICA taxes. They have to pay them to the government. They can't just pay them once a year like you do when you do your 1040. They have to pay them quarterly. You pay your federal withholdings, and you also pay your 2 FICA taxes. But again, the bad part about the FICA taxes is you have to pay the employee part and the employer part, which is not nearly as good. and you pay it on whatever you believe your net income will be for the business. You're going to have to, of course, estimate that when you pay your what's called estimated taxes. And you do that through the Schedule SE, which is a part of Schedule C. When you take tax class, we'll hit that and you'll see what that is a little bit in more detail. The final piece here is, before we get into the next week's material and we look at the 941, is if you're the employer. Now this is going back to the employer. And when we were doing journal entries, I wanted to pull up, that's what I wanted to do here, is pull up my journal entries. How does the employer know when they have to pay their Social Security and Medicare? How do they know when they have to pay their portion and our portion? Well, that's what's called the look-back period. The look-back period is a way for the IRS to say, okay, if you have this much money that you've collected, then you have to pay in this time frame. So the look-back period says, and you can read through this, but basically it consists of 4 quarters, 4 of the previous quarters, and you can see read through that to determine exactly when the 4 quarters start and end. But what it says is, if you have $50,000 or less in payroll taxes, and that includes your federal, which we'll talk about in a couple of weeks, plus your FICA, which we're doing now. If you collected a total of $50,000 or less, basically less than $50,000, you are then considered a monthly depositor. You only have to pay in those payroll taxes every month. Even if you pay your employees weekly, you only have to take that money to the IRS once a month. If you are over $50,000, you have to pay what's called biweekly, which means you pay every other week. And that's if you have $50,000 over the entire year. Not that you have $50,000 built up at any one time. That's just if you have collected $50,000 over the entire year, paid it, and then collected and paid. If all of that added up to at least $50,000, that's what is considering you in the biweekly. If you are a huge company and you collect at any one time and you have $100,000 in taxes that need to be paid and still haven't been, that has to be done by the next business day. So that's the 1-day rule. If you're a really small company and you collect less than $2,500 for the entire year, then you only need to pay quarterly, and you can do that with your 941. A few items with the 941. The 941 is done every quarter, but we're going to get into that when we start next week. So with that, we will close it out. And I hope you got and benefited out of this Chapter 2 recording.